let's say you want a business and you want to create one. Now you got to pick one. I love this quote from Ted Turner. My son is now an entrepreneur. That's what you're called when you don't have a job. So anyway, it's kind of silly, but it's true. So I'm going to focus. There's lots of business entities out there. I'm going to focus, just to keep it simple, on sole proprietorships, LLCs, which is a limited liability company, C corp and S corp. These are all available for single member entities in Texas. And be aware, if you don't live in Texas, let's say you live in another state, Louisiana, Arkansas, whatever, some states allow single member LLCs. Some require you to have 2 or more members. But in Texas, it is okay to have a single member LLC. That's fine. But in other states, you just have to check your rules. So let's say that you're trying to pick, you want a business, and you want to pick between a sole proprietorship, LLC, C corp, S corp. Well, the factors that I use, and this is what I teach in my business law class, is you want to think of the LENT factors: the liability of the owner, ease of creation, need for capital or money, and then the tax treatment. Those are the 4 factors that you want to consider when you pick your business entity. And so now we're going to go through each of these and see how they apply to the different entities. And this is sort of a spreadsheet I created that sort of lays out the LENT characteristics to each of the 4 business entities that we're about to discuss. Now, one thing you'll notice is that the first business entity that we're about to go through in a little more detail, a sole proprietorship, has unlimited liability. And I put that in red here. Red because it's bad. Unlimited liability is not a good thing. What that means is if the business, the sole proprietorship, incurs some liability, let's say that you hired somebody to create a web page for your editorial business, and you're a sole proprietorship, and you don't pay the individual who created your website, and they sue you to pay the $1,000 that you owe that person for creating your website. If they sue you and you're a sole proprietorship, they can, in theory, if you lose and you owe that, and the judge says you owe that $1,000, they can take your personal items. They can take your stuff, if you will, in theory. Okay. And so what does that mean? Let's say it was a big dollar. It was a fancy website, and it was $100,000. Okay. I mean, that's not realistic, but let's just take an extreme example like that. What that means is if your business, you have a little sole proprietorship bank account and you only have $2,000 in there, they can take that $2,000 in theory, plus the $98,000 extra from your personal bank account. That's in theory how it works. Now, there are homestead laws in every state, and they protect people from creditors. So you are allowed to keep a certain, one home up to 20 acres, I think it is in Texas, and you can at least have one personal vehicle. If you have a truck used for your business, like a tool, you got your tools in your truck and you use it for a business, you would be able to keep that. So homestead laws protect you from creditors who sue you in lawsuits and that sort of thing. But just be aware, outside of that, homestead law, sole proprietorship is bad because you are subject to personal liability on your business debts and legal claims. Okay.
So Mike, can I reframe this just a little bit? So say
sure.
I have a client and I do $8,000 worth of work for this client over the course of 3 months. And the client turns around and says, it wasn't good enough. They didn't like it. They don't want to pay me. In fact, they're suing me because they missed deadlines or something because my work, yada, yada. I've never had a client do anything crazy like that. They could sue me and I could possibly owe them $8,000 if I was a sole proprietorship, and I would have to pay out of my personal account, is what you're saying, if I don't have business resources to that amount, if they win.
Yeah, that's a good way to frame it, except I think in the example you gave, maybe they prepaid the $8,000, so they're suing to get the money back. I think that would make more sense versus, if they paid nothing up front and at the end of your work, you claim they owe you $8,000, then you're not really, they can have a countersuit and say, well, you don't really, I don't know. It just, in other words, the sole proprietorship, unlimited liability under a sole proprietorship means if they sue you for some reason, not that you can't collect from them. So But again, in your example works perfectly if they prepaid and they're trying to get the money back from you.
Okay, gotcha. Thank you.
No, thank you. That puts it in perspective. So that's helpful. Now, you'll see some of these other entities, all the other entities, LLC, C Corp, S Corp, they have limited liability. So that's a benefit. If you go through the trouble and the expense of creating one of those, they can only get the money in that business entity's checking account, for example, or whatever assets are in the name of those entities, LLC, C Corp, S Corp. So that's a good thing. That's why it's in green. So just be aware that is the difference between sole proprietorship versus the others. Other things that are different on the screen, I'm just going to jump to income tax. Single income tax does apply to sole proprietorship. That's a good thing. That's why it's in green. Most LLCs are treated by the owners as a sole proprietorship for tax purposes, and I'll explain that in a minute. But that's also a good thing. But it could be that you treat your LLC, you have a choice, treat it like a C Corp, pay double tax, which is not good. If you have a C Corp, it's subject to double tax. So this is just a summary, but now we're going to go through each of the four entities in a little more detail.
Before you go too far, Stacy, out of clarification,
Sure.
I may have opened a can of worms. She's asking, could they potentially come at you for more damages or harm due to missed deadlines? Since I listed that in my example, is that something that businesses could incur? You know, if they're in a contract with another business. I guess to say sole proprietorships, I think was what we were specifically talking, but in general, could someone prospectively sue you as an individual or as a business if you cause them to miss deadlines or lose their own profit?
In theory, I think anytime you breach a contract, the answer is yes. If they can prove damages that are reasonably related to that, and I'm not sure, forgive me, I'm not an editor, so I'm not aware what their damages could be if you don't timely, perform under that contract. But if they can reasonably show that because you're late, they missed some opportunity that they would have definitely made money, not just speculation that they could have sold the book sooner and made more profit sooner. If you had some, I don't know, some way that you would have definitely made money, if you had done your editorial work on time, they could have made money in this whatever the opportunity was. Then yeah, they can potentially sue you for that. Does that help?
I think it was one of those things where I accidentally made us get lost in the weeds about
That's okay. No worries. So this is the exception. This screen just says, look, if you tried to create an LLC, C Corp, or S Corp, which has limited liability under the little spreadsheet I just showed you, that's in green, that's a good thing. But the courts can actually say, you know what? Even though you went through the trouble and expense to create an LLC or a C Corp or an S Corp, we're going to treat it as if it was a sole proprietorship and ignore that LLC or that C Corp or S Corp and in a process called piercing the corporate veil. This does not happen very often. It's very rare. But if you find yourself in a situation under these four different scenarios, A, B, C, or D, if you do one or more of these things, you commingle your assets with the business's assets, personal assets and business assets. You don't meet corporate formalities and do all the things that you normally would do with the business. The court has the option of ignoring that LLC, C Corp, or S Corp and treating it as if you have unlimited liability. So just be aware of that. If you do create a C Corp, LLC, or S Corp, make sure you follow the corporate formalities, make sure you keep the money separate for the business versus your personal, and you should be fine. You shouldn't have to worry about